And welcome to DFI Podcast, where we go deep on all things Web3 and infrastructure. My name is Wes Floyd. I'm joined by my brilliant co-host, Ishan Chordia. Ishan, how are you today?
I'm doing well. Nice day today.
So much going on. So much going on with both of us. I don't know if we can announce any special personal. I'll go ahead and announce my good news. How about that? And then
Yeah, I'm going to wait
to,
a couple of weeks.
You might still stay in stealth mode. That's probably a good move. Yeah. So today was my first day at a new gig at Eigenlayer. So
Yay.
let the shilling begin.
Congratulations.
Thanks, man. Super pumped about it. Good fit with Web3 infrastructure, all those things. So I'll try to talk about things in addition to restaking as best I can.
This pod is not going to be a shill for your new company.
And we have to have the disclaimer now that says the contents of the podcast are not necessarily representative of other companies or things.
Oh yeah.
This is not investment advice. Although if you do invest, throw some cash to your boys at DFI Podcast.
Yeah. If you're going to invest some money, give it to us instead of the S&P 500 and other useless companies.
I'm really appreciative of you getting Will on the podcast. That was so much fun. I don't know if you had any initial opinions about that whole conversation.
Yeah, I thought he was really good on the podcast. We had a really good discussion. One thing that I really liked about the discussion was we just talked about Web3 regulation, government, crypto, without really getting into, I'm sure he does a lot of interviews about why he's running and why he thinks he can beat Senator Kirsten Gillibrand in the Democratic primary. And so it was good. It was cool to see that. And it was also very clear that he has a lot of well thought out positions on Web3 and crypto and technology. One thing I found interesting was that a lot of it came from national security. Makes sense from his perspective, working at a private intelligence agency and being a ranger in the military. I think it's special forces. His perspective generally skews national security. And I came from it more of like innovation, employment driven, being a leader in the world kind of perspective. So it was interesting to see like both of those perspectives clash. What do you think, Wes?
I think it was great to speak with someone who's in the middle of making the sausage of policy and all the complexities that go along with it, all the trade-offs that have to be made. I tried to push Will a little bit on difficult topics, and I think he was willing to like share some honest opinions about them. It's great to see, especially people our age getting involved in politics directly, really like making that investment in their career. It's just good to see people like keeping the movement fresh. Because if we want a functional democracy, we want movement. We don't want like people spending their lifetime in Congress. So he represents that. And I thought he had a lot of really well-informed views. So I'm excited to watch his candidacy as it grows. And hopefully we were a small part of his success.
Yeah, me too. I think one thing that we harp on a lot is age. But like the average age of an American has gone up. So I'd be interested to see if the median has gone up, what is like the age difference between a politician in the 90s and the median age then compared to now? Because people say 40s and you're 20 or whatever, right? I think a lot of it is taken as a joke, but if you go back like 50, 70 years, like people looked a lot older when they're 35 than they do today. Their brains were not like they had maybe dementia or other diseases earlier than there are today. People are like really a lot more like cognitively not declined in their 60s and 70s, which was not true earlier. While I'm really glad that a lot of younger people are needed in government. One thing is just to keep that in mind when it's okay. As the age grows, the median age gets older in the United States, is that median age of the politician also going to get older? And that scares me a lot, right? Because that means that the politicians are really just serving like ages 65 and up as constituents and not pro-growth. This is a whole geopolitics and economic policy thing that I don't really want to get into. But overall, you see Europe, older countries that are older have older politicians, but countries that are older also have more risk-averse younger people. And
Mhm.
so like less entrepreneurship rates in countries that have older median age, less technology companies, less innovation, older type of more traditional type of companies. One thing I want is younger people in politics, but also having this like point-based system for immigration where you have a lot of young people come into the United States. So we always become like a
Mhm.
pro-growth economy
Mhm.
as opposed to a European style economy where everything was based off of like government support and welfare programs, etc.
I love it. I love you. I agree with your perspective. In fact, I'm actually not as knowledgeable about the immigration issues, but I understand it's been a big topic recently. There's been some rules that have changed. That's probably a topic worth going digging into on its own. Just for my own understanding, folks listening might be interested in that as well. The
Hmm.
H-1B visa process. How do we keep talented tech workers, attract talented tech workers versus Canada, Asia, other places? Yeah, I agree. Should we dig into any of the news today?
Yeah. Did we already talk about the XRP and SEC ruling, or do you want to summarize what happened there?
Yes. So interestingly, like the background is that he had sued a company named Ripple. I think it was 2 years ago, maybe it was 1.5 years ago, for issuance of a cryptocurrency named XRP. And there was multiple aspects of the suit. Part of the suit was suing the public sale of this. They had an ICO, I think, in 2017. Another part of it was the continued use of the token on other exchanges, and the case had been in the works for a very long time. And people were pointing to this, waiting for it to finally get a judge's resolution, because once the judge starts to set precedent of how they judge these things, it's a massive influence on the crypto industry, because currently we have a head of the SEC who says that most crypto tokens are unregistered securities. He says that in absence of Congress. Congress has not made specific legislation about the designation of cryptocurrencies. So, one thing that would trump a regulator is if there was judicial history of judges saying whether or not this particular lawsuit was legal. And so this was a major landmark ruling. And maybe we can get into some of the just high level details of what the outcomes were.
Yeah, I think overall it seems to be like a short-term win for the crypto industry. What's interesting, the ruling was like the TLDR was because people didn't know where they were buying the tokens from. It was not necessary that like they were fundraising for Ripple. Like the
Hmm.
XRP was not like a security sale. But when XRP went to institutional investors to get them to buy it so that the institutional investors would make a profit, and it was like pre-ICO, and they would fundraise, they would use those funds to build out more features on the XRP token or the ledge or the crypto or the blockchain. That was considered securities fraud,
Hmm.
right? So
And
it was like partial win, which is confusing to me because what they're saying is that, oh, if you're issuing tokens and if you do an ICO in an exchange, you're basically not committing securities fraud. But if you go and sell them to institutional investors before, then you are committing securities fraud. And retail, I'm not saying there aren't smart people in retail, but in general, like institutional investors do a whole sort of due diligence and retail do not. They like,
correct.
there is some due diligence from really smart people on Reddit and et cetera, but most people, including me, don't do the due diligence that institutional investors do. So it almost seems backwards that like people can scam retail, but not institutional investors. So that was super confusing to me. But yeah, overall, I think win for crypto. Wes, what are your thoughts?
I agree. I love it. Anything in favor to rule a cryptocurrency is not a security, I think, is great for our industry. It gives also a little bit of clarity moving forward. It takes some heat off Coinbase and some legitimate
Mhm.
actors in the space. I think the SEC is really grasping at straws in absence of good legislation. They are trying to vet this out in the courts, and it's good to see some movement there. But ultimately, I'm glad that we can all move forward, and hopefully, eventually, we'll get some good, you know, the securities regulations that we have today from 1930s and the Howey test are just so antiquated. They really
Mhm.
struggle to be applicable in these situations. Like you were talking about, token issuance, ICO, those concepts could not exist in the technological era of the 1930s. So hopefully we'll get some new tech, some new legislation, and we can all move forward.
Yeah, I hope this Lummis Gillibrand bill gets wrapped up into another bill, or that bill that's in the House gets put into the Loomis Gillibrand bill and they passed something. Though one thing that Will said, I think last week was interesting is that even if it gets passed, is there appetite in the White House to sign the bill and not let it just, you know, what do you call it? What's it called
Language,
when they don't really
veto,
veto? It's not really a
soft
veto,
veto.
yeah, something like that, whatever. Let it basically withering it away on the desk, but not signing it.
That's right. No, that's a good point. And is the White House moving past the FTX scandal? Can they take a softer approach to crypto?
Yeah. So yeah, I hope there are more. Yeah, I guess we just need more legislation, right? Like the judges, I feel like this is a really weird ruling. It's good and it's weird. And I'm not sure if the weird part is good, but it's mostly good.
Speaking of government, should we chat about treasuries?
Yes.
So one interesting development is that there's been this new growth in the market, real world assets, which we talked about before. But this one is especially valuable because the crypto industry has done really well with stable coins for so long. And stable coins underpin a lot of decentralized finance. They're a medium to hold on in between trades, to maintain your value. They're just like a critical building block, a critical tool in DeFi. This new component called tokenized treasuries looks to wrap physical government federal treasuries on chain through these various companies that are offering it. And the market cap is growing up to 600 million right now on chain of these new wrapped treasuries. So, Ishan, do you have any opinion about this or potential for what use cases it might unlock?
So I actually don't know much, but what is the advantage of tokenizing a treasury and putting it on chain?
I think ultimately a couple things. For the folks who are offering this, actually, interestingly, some of the folks that are offering this are folks like Franklin Templeton, some very large traditional finance folks, and also some startups like Ondo Finance. From their perspective, they can offer it as a new product on chain and they'll make some nice profit. So that's their benefit. From the end user's perspective, if I have some crypto and I want to lock it up and earn some yield, if I have to bring that crypto back into fiat and then buy treasuries with it, and then at the end of that time period, bring it back into crypto, that's a clunky process and
Mm-hmm.
taxes and moving it off
Mm-hmm.
chain and things like that. But if I can keep it on chain and I get the benefits of the yield and stability of a treasury, that could be a tremendous use for some crypto that need to park. Whereas otherwise, if I keep it in like a stable coin, USDC, it's going to be stable. It's not going to lose value, but it's not going to have any upside. And so there's just so many different DeFi folks who are chasing different types of yield and different types of risk premium. It just gives one other tool for them to use.
Yeah, makes sense. So it basically allows someone to not have to convert to fiat to buy treasury bills.
Indeed. That's
Okay.
exactly right.
Okay.
Yeah.
Yeah, I think this
And
is super cool. I think personally, like a lot of the stuff the public or the media calls like financial engineering and it's looked down upon, but really all these different kinds of financialization of tokenization and financial products is really good for the economy, right? There's a lot of different things that you can do, different ways to generate yield, more liquidity in the market, which is always a good thing, right? The last thing you want is an illiquid market and something black swan event to happen. And then there's like a whole bunch of contagion effects on that. Yeah, I think overall it's good. I'm actually super excited to see like when will like all treasury bills just be natively tokenized from the Fed or from the US Treasury rather. And I think it's like one step in the right direction to get to that endpoint.
you're right. It puts pressure because then if you have this massive on-chain treasuries market, then the off-chain treasury market would want to get in on some of the benefit of the liquidity and the lack of friction in the digitized version of it. The other thing I think you made a really interesting point, what I just want to kind of expand on briefly, which is there is, and I have this opinion sometimes too, this over financialization of things in crypto. Okay, great. But you've already got crypto coins. You need to have treasury coins, hyper, and you restake those. It's like some of those shenanigans get a little crazy. But the other interesting product of that is that when you have over financialization, like in this case, let's take treasuries on chain, as a result, they have to build really interesting new infrastructure to support those use cases. And that infrastructure that they build for financialization can be used for other interesting things, decentralized social media, decentralized science, that
Mhm.
additional layers of infrastructure for Web3. So that's my optimistic hope is that some of these companies are having to maintain these contracts, these treasuries off chain, and they're building new tech to support that and get that cleanly linked on chain with ZK proofs or otherwise. And hopefully we get some benefits as an industry as a result.
I 100% agree. And I actually don't think like crypto is overly financialized compared to the traditional finance system. I was talking to this guy who started a company, can't say his name or what they do, but he was walking me through what he did at Goldman. And I was on how like selling like investment as an investment banker, like selling deals works to like a broker, right? The brokers are actually not doing the work. Like it's the bankers who are doing the work and the brokers like coming to retail and like making the deal happen. And he was like, oh, I'm just trying to do the same thing for crypto. And then I started looking at, oh, what's there in crypto compared to like traditional finance? And there's a lot less. DeFi gets like a bad rap, but there's like a lot less financial engineer happening in crypto than in like than the traditional finance sector as a whole. Not to say that like what traditional finance is doing is a bad thing, because I think all of those things will come to crypto, but more that it's DeFi doesn't necessarily need to get a bad rap for you have ETH tokens, and then wrapping them, staking them to get wrapped tokens in a liquid staking protocol, and then using that as leverage or restaking multiple times to turn a small amount of Ethereum into a large amount of some sort of stake token. But this is happening in traditional finance, like on a normal day-to-day basis, and no one bats an eye. I think all these things that got a bad rap in DeFi is just a normal thing in traditional finance, but it's not as consumerly like available to consumers, or people don't talk about it as much. So I thought takeaway.
Exactly. It might seem scary to the average retail investor, but if a person works in quantitative hedge fund trading, they're thinking this is completely normal.
Yeah.
You had a really interesting article here as well about Amazon expanding their Web3 reach. Do you have any opinions about, give some context on what they're up to?
Yeah, I think there's two interesting articles just about the Web3 economy. So one is that Amazon is building more services within AWS. I think these basically cloud tools for blockchain developers. So I think if I remember correctly, these tools are called Access and Query, and Amazon already has something called Amazon Managed Blockchain that allows people to build like Web3 infra and other stuff, right? I don't know much about it. It could be like a Alchemy and Infura competitor. It could be not. I'm not too sure. But I think the interesting takeaway is that they're trying to ramp up the jobs, the amount of software engineers in the Web3 team and build the Web3 team at Amazon. So it's like on the one hand, like big companies like Amazon are realizing or waiting for Web3 to become big enough where they can like add a lot of top line revenue on their earnings report. And that looks like it's going in the right direction. And then like Sequoia, who has taken some hits recently, they slashed their crypto fund from 585 million to 200 million. So it's okay. So now Amazon's doing this and then Sequoia's doing that. And I don't think either of them are indicative of the crypto market, but I think it's just interesting to see two well-known brands or well-known companies do completely opposite things.
It's a good juxtaposition on the Amazon side, especially with the use case they have there for querying the blockchain. I think they are very well positioned to do well in this space. As a side note, one of the side projects I have is this thing called the Web3 Index, and we keep track of all the different projects that are building different types of infrastructure, compute, data, AI, ML. And there are a lot of projects, startups right now that are trying to do different types of databases and querying. There's Spice, there's Space and Time. We're going to talk to one that does some similar technologies here in the next few episodes. But a lot of their infrastructure is centralized. And for users that want to query blockchain data, in some use cases, especially if it's large BI type queries, they're okay with it being centralized, especially if it's a very trusted centralized provider. So I think AWS has some opportunity there for competitive advantage. Google's very big in it. Microsoft has a big play as well. Now, the other interesting thing I'm really glad you brought up Sequoia. Do you think Sequoia had attained a reputation of being a leader in the crypto VC space at any point?
I think they did, but not at the level. When I talk to people in the Web3 space, investors, like the leaders are always considered like Paradigm Capital and Electric Capital, at least in the Bay Area. Like these two are like far ahead. There's a lot of VCs.
A16Z crypto and a few others in that
crypto.
space. Yeah. And they're like the top tier. I agree. Yeah.
I think Sequoia was up there. I think the thing with Sequoia is that in the pandemic, when interest rates were super low, they decided to raise like large amounts of funds, or maybe even before, they just did not hit well on a lot of things. Sequoia's ecosystem fund also got slashed by 50%, which
Yeah.
is like a non Web3 fund, right? So it's not just this one dropped 65, 70%, whatever it might be. It's not the only fund in Sequoia where they slashed the number, how big the fund was. I think you also are seeing like a lot of investors being like, these fund sizes are too large. So people like paring down after like years of deploying large amounts of capital. So I don't know what to make of the Sequoia stuff. Um, but I do think like Sequoia was considered like at least in the Bay Area, considered a player in Web3 deals and crypto deals. Um,
It's unavoidable. After all of that cash was floating around and all those losses were incurred, people are going to have to pare back. They're going to have to take back some cash from there, or not return some cash to their LPs. But that's the destructive part of our creative destruction and capitalism. You can't have the good without the bad. So someone has to be picking up the difference there.
Yeah, exactly. Let's see. I think in general, Sequoia has a great reputation and has done well for a long time. If you ask me, am I bullish or not on whether Sequoia will come back and invest well? Probably they'll come back and invest well, right?
They have
That's
a
my
long and storied history. They have every
Mhm.
opportunity to get back in the saddle and in the driving seat.
For sure.
So congratulations to us. We're now in L2 summer.
Mm-hmm.
Made it.
Yeah.
The term is stuck. I think I heard people at ETCC in Paris this week talking about L2 summer. But what's happening is that a lot of major properties are moving to Ethereum. You had Celo, which was a major dedicated L1 blockchain. You had Coinbase launching its L2 on Ethereum. And so Ethereum is becoming a center of gravity, and people are launching these L2s on top
Wait,
of
did you
it.
just say Celo moved? Like they're not doing an L1 anymore, or did they just launch an L2 on Ethereum?
That's exactly right. Celo just this past week announced that they are migrating their L1 to become an L2 on
Wow.
Ethereum.
I did not know that.
It's incredible. And I'm not going to tell you which restaking data availability company they're partnering with to help with that.
Nice.
Yeah, DYOR. But yeah, it's happening. But the other contrarian aspect of this is the Polkadot and the Cosmos Tendermint plays, which is like the multi-chain. Everyone has their own L1 kind of play. That's like a different thesis, which is a lot of belief among that community. But then on the other hand, other folks are saying all the capital exists within the Ethereum ecosystem, all the existing apps. We want to be like as Ethereum native as possible. So they're building off Arbitrum, Optimism, and those other things. What do you think about the whole space?
So another news, Polygon released 2.0, right? I don't know if you saw Polygon 2.0, they released their white paper. They're trying to build infrastructure so anyone can build as many Polygon L2, basically scale to infinite. I want to put that in quotes because there's no such thing as scaling to infinite, but scale to infinite amount of L2s using the Polygon network. So that announcement was made last week or within the last 2 weeks. Filecoin, so Protocol Labs has released something called Interplanetary Consensus, or IPC. That team the software is that libraries to help people build what they call subnets, but what we would call L2s. So yeah, it's not just Ethereum, right? The Celo news was big. I did not actually know about that, but I personally think that less L1s and more L2s make a lot more sense from just how I think one thing that's been pretty clear from the Ethereum Foundation's roadmap is that triangle that everyone talks about, right? Scalability, decentralization, and security. Scalability / performance, depending on however you want to call it, but then decentralization and security. And Ethereum is moving towards the layer 1 being decentralization and security. And they want layer 2, and they want all transactions to happen on layer 2, basically. And so that Ethereum can be decentralized and secure. But if you want like high throughput, or which is transactions per second, you go to Polygon or Arbitrum or Optimism or whatever, right? Matter Labs has ZK rollup, ZK Sync, something, I don't know. But I think in general, the L2 makes a lot more sense because it almost seems consolidation. I don't know. I'm trying to think of I'm trying to think of like an industry almost. I think the best one that I can think of off the top of my head is those electric scooters that are all around. I don't know if you remember
Yes.
in 2019, 2018 and 2019, you had 50 companies like Lime and Bird and Lyft and Uber and I don't know, all of this. And then they consolidated around like three companies, right? It's because
Yes.
network effects. If all the capital is in a few layer ones, you want to build your layer twos on top of that instead of continuously building layer ones over and over again. But yeah, that's my take. I don't know if you have any thoughts on what I just said.
Nope. I think you nailed it. At the end of the day, there are a lot of use cases that want to make different trade-offs. They want to have a lot of transactions, low cost transactions, high throughput. And the Ethereum mainnet may not be the perfect place for them, but they want to let people bridge conveniently between the assets they have on Ethereum up to these L2s, these specialized L2s, and all these different projects. It's a bit of an explosion right now. It's to your point, it's 2019. There's so many different options right now for developers. We'll see some of these die off because they just won't get enough adoption. But at the end of the day, we're getting a nice outcome here, which is you get a lot of different benefits. You can choose your kind of trade-off and where you want to play. And the fact that you have these folks all kind of centering around Celo migrating to Ethereum shows that there's portability. The L1 wasn't the right fit for them. They can migrate to the L2. It doesn't mean that they're over. It just means that they're taking a new chapter in their
Hmm.
project's life. So I'm excited to see how this plays out. And I think it's an area, even for folks like my background was in decentralized compute. I know you spent a lot of time in decentralized infrastructure as well. And in order to implement these next generation use cases, they're going to need low cost transactions. So these are going to be the decisions that a lot of us are going to be having to make is which is the right chain to play on. And I think it's just good for the ecosystem in general to have this many choices right now.
Yeah, I think we should quickly describe what an L2 is in a sec for people who don't know what L1 and L2 is. But overall, I actually think from like a community and business development perspective, like Silo deciding to become an L2 on top of Ethereum is the right choice. I think part of it is the EVM fast enough? And that's like always the question, right? Is the EVM fast enough and performant enough to handle the workload that you're trying to run? But it's almost better to figure that out later and have the backing of the Ethereum community because it's so large than, or whatever community, right? Like Filecoin, other layer ones, um, Solana, than it is to try to build your own layer one from scratch, build a community, distribution, user demand,
Bridges,
supply,
security,
bridges.
all that. That's a
Yeah,
lot.
all of that.
It's a lot when you're
Uh,
just trying to deliver an application to the end user.
And
But
also you can imagine Ethereum and Solana are great examples of like very general layer ones. But if you start building very app specific layer ones, use niche use cases, like I don't think you're as a developer or an entrepreneur, you're doing yourself a favor by building a layer one.
that's right. Spend time in your niche area. Let's avoid reinventing wheels. A lot of choices right now, but we'll see it settle out. Oh, yeah, we should talk about, to your point, what is the difference between L2 and L1?
Yeah. Do you want to take that one, Wes?
Yeah. So an L1 is basically the blockchain. It is when people say an L1, that's it. Bitcoin is an L1, Ethereum is an L1, Solana is an L1. They just exist on their own. They have their own group of miners or validators, and that's it. They are a network. But then a few years ago, folks started saying, what if we want to do more transactions at a lower cost? Because transaction costs on these L1s can be very high. It can cost 20, 30, $50 to do a swap, to buy a token, to do basic things. So what they did was they created what they call L2s and what they call roll-ups. So basically what you do is you bridge your assets to this other chain, which is not as secure as L1, but it's semi-trusted. You perform a bunch of different transactions, moving coins, whatever you want to do. And then when you're done, you bring those coins back to the L1. You have what's called a sequencer that writes all these transactions and writes them back into L1. So your transactions, your changes of your cryptocurrencies are the same as if they had happened on an L1, but they happened on an L2. You had lower transaction fees. All the heavy lifting happened on the L2 and you write back into the L1. And that's the roll up that rolls back up into L1.
Right. And
Was that decent? Did that cover it?
yeah, yeah, I think so. I think like high level, there are different types of L2s, but the most common are like Optimism, Arbitrum, and Polygon for Ethereum. And what they do is they just batch a lot of transactions together so that they go through the Ethereum mainnet faster, right? And instead of doing like one transaction per one transaction, you can batch them up and send them to be validated on main Ethereum mainnet. And that was like the first set of L2s that came up because having a higher transaction per second or a higher throughput was super important, and it's still super important. But now you see a lot more people building app specific or use case specific L2s where they don't need they don't need to build an L1 from scratch, but they still need their own like blockchain, and they have their own validators and stuff like that. And it generally, I won't say it's as secure as like L1, especially as Ethereum, but it's mostly as secure because the point of a layer 2 is that it inherits the security of Ethereum or its parent blockchain. And you can have like staking and validation, block validators, etc., on your L2 so that
You're right.
Sorry, one sec. Yeah.
Yep. No, it's definitely
so that it's secure.
Yeah, exactly. It doesn't always need to be as secure as Ethereum. Maybe it's 90% as secure, and maybe that's good enough.
Yeah, exactly. All right, Wes, I got to go. I am a couple minutes late for my other meeting. But this was fun. Yes. Maybe we can talk more about L2s another time.
We will. We'll talk about it next time. And until I talk to you next time, Sean, happy L2 summer.
All right. Bye-bye.
Take care, bud. All right.